Okay, hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. We did just get the release of retail sales here in the United States, guys, on a quick start here. A little bit worse than expected across the board. Month on month, we were looking for 0.4% contraction. We saw a contraction of 0.8. If you strip out autos, that's also almost double the draw there. Also, you have a little bit of an upward revision, but still not or not shattering over the loss that we saw here, or the weaker number that we're seeing on retail sales. So we'll take a look at current price action in just a moment. Guys, great to be here with you this morning. Petro, Raymond, Mark, Eileen. I heard somewhere your birthday's this week. Glad you were born. Have a great celebration. I appreciate that, Eileen. Guys, I'm assuming sound is good to go, and we will jump right into the chart. So obviously on the back of this release, here's what we're looking at as far as the dollar performance. So remember, start off the week, the index, the focus was still in that resistance range, and it's still intact. In fact, in overnight trade, we actually went from one more stretch right into the 11,880 level, which is the exact high in the opening range high for the month. So we're still not out of the woods yet as far as the resistance level capping the dollar advance here. If this does break below yesterday's low, it will complete an outside reversal candle at key resistance. So again, sort of the same setup, same sort of themes that we started off the week here are still in play. So guys, feel free, as always, to throw out any questions, trade setups, specific pairs you guys are looking at. I just want to take a moment, take a quick look through the scalp setups that we highlighted on the report yesterday. The British pound, tricky little guy here. So I put a note on this literally last night at 10 o'clock, guys. Listen, at the end of the day, it looked like a false break of the opening range high for the week. We talked about this in the webinar. We talked about 152.70, 152.65 being what you want to stay constructive above. In fact, not only did we pull back right below that, but a couple of things I wanted to note on this. Let me just show you the live chart here for sterling dollar. Excuse me. The break that you saw here to the downside in the pound yesterday was actually a break of the U.S. opening range high. Okay, so here's your 730, 730, 830 span. As you head into that, you saw a downside break. That pullback below 52.70, taking out of the long side. But not only that, on the daily chart, guys, this thing actually closed on a lower on the candle. So this is one of the main reasons I reserved back that long position or that long bias. Remember, at the end of the day, we were still looking for a downside break of this to get the shorts in play. On the attempt last night, momentum holding 40 like a rock as support. All right, so that should have been a tell. Obviously, guys, this is in response to the BOE inflation report. A quick tap on that. Basically, it's very interesting. The BOE has not changed its stance, and in fact, the forward guidance remains the same. So as we headed into this release, the risk was, look, CPI still, the broader inflation prospects are still very soft in the UK. Remember, the BOE and the ECB guys do not have a dual mandate like the Fed. Their singular mandate is price stability, which is inflation. So it's interesting today here, Carney coming out saying that, although or through the inflation slump, we still think that interest rate increase would come sooner than expected, and obviously the next move that's being foreshadowed here is an interest rate hike. Markets took that as status quo. You're still looking at a BOE that's poised to raise rates, and we sailed right through not only the opening range for Europe, which is what this break was with the break above 60, that would have put us constructive. I wasn't awake for this, but confirms the opening range break for the week, bottom line. Okay, and we're still within the confines of the structure. Next topside targets above here. Obviously, this weaker than expected retail sales data, guys, is going to fuel this even more so. You're looking at a near-term target at this 1618 extension off the lows. It's 54.26 or 54.25, and more importantly, 54.60. Okay, and 54.60 is actually going to coincide with the median line off the low here, heading into Asia Pac tonight. Okay, so here are the sort of the two near-term targets I'd be focused on for the British pound near-term. As long as you stay above that opening range high at this point, we'll continue to favor the long for the pound. Inevitably, towards the end of the week, to open up next week, I think you get a brilliant opportunity to short this. As it stands right now, as per our discipline, it's a pretty textbook break here to the upside. questions on the British pound scalp setup from last night? Didn't go as expected, but that's why event risk requires us to be a little bit more nimble and take a foot to the backside. This break last night, you might have seen me put out a tweet saying this looks like a break of the Asia Pac opening range, and in fact it was, but we came right back in through it. So we'll reserve that top side. We'll stay constructive near term above 53.20. Only a break below 52.70 puts us back on the bearish camp. And right now, especially in time, that pitchfork support, lower median line parallel will coincide with that as you head towards the end of U.S. trade here. As you head into the start of European trade tomorrow. Would you buy a pullback, Mike? If so, where to? So absolutely, DB, I would. If the pullback comes into this region or the former high and you find a momentum trigger to the upside, see, unlike the swing trades, guys, or a broader or your basic typical trade strategy where I can sort of map out the levels, I don't play it like that. It's all based on what the near-term momentum signature is doing. So if we get the pullback, DB, and I get a trigger, the long side's in play. Where to? I'm looking for 33 pips on the initial stretch. And I'm not just blindly looking at that. Obviously, we're looking to target these levels, but the levels are all here. On a pullback, I'd be looking to play, if we take a long from 53.20 DB, the initial target would be 53.68. Beyond that, right back into 54.25 we just talked about, right? And especially on a trade like this, guys, the levels have been very clean. The market has respected our levels rather well. So constructive above 53.20, bullish invalidation sub 52.70, top side targets 54.25. DB, does that answer your question, man? Let me know if that makes sense. Be more than happy to review that. He said, yep, thanks, all right. Okay, so didn't go as planned, but the BOE interest rate decision giving us that topside break and reaffirming the opening range that we made yesterday. So I think this one's pretty clear cut. The momentum signature since the start of the week, guys, still pretty constructive. All right, so that is the British pound. Moving right along, the next setup was the Euro Oz, and what a beauty it was, guys. Obviously the weaker than expected Aussie report last night really fueled the upside here. I put this note out yesterday as far as, the focus being against the 148 handle. I'm not calling a high to the broader trade or the broader rally that we're seeing in Euro Oz, but certainly on an opening range break, you make that opening range Monday, Tuesday, you look for a Wednesday break for a stretch into a Thursday, Friday high. Well, we've made a Thursday high at this point. And I do think you see some pullback off that level, but inevitably you want to stay constructive in the pair. There's no reason not to. So here's what we looked like last night. Note that target at 47.90 to 48.08 coincides right on with that median line. And that's the idea for getting on the bearish side or looking to be cautious as far as the longs are concerned here into the start of today's session. Here's what the live charts look like. Let's just jump right in. So before we look at the scalp, I just want to keep in mind the daily chart that is in focus here. And the fact that that 48.08 level, guys, is not only the 618 retracement that you saw here back off the lows from December, but if you look back in price, it's been a pretty decent pivot. Okay? Catching the lows, resistance, support, resistance. Here we are right again. Okay? And also note one thing, that the momentum signature hasn't made a break of the highs. So if we take this on its face value and we close right here, this would be considered divergence. Obviously, we can't make that assumption until the close of the session, but at this point, longs at risk, sub 148.08. Mike, does that mean that you're short? Not necessarily. If you want to try to play the short side against, as I noted in the report yesterday, be nimble. The opportunity is there. It's going to be a slow trading. It's going to be a slow moving scalp. But remember, when you're trading counter trend, that's when you want to be light. So if you are trading the shorts here, if you're trading against 48.08, 47.90, real tight stops, half the leverage that you would typically work with, and as soon as you attain that 50 pip ATR, I'd be jumping right out. Now, obviously, here's a scenario where, if we had been in that short, limits would have been initially at 47.13 and at 46.57 are the notes that I put on this one yesterday. Okay, so 47, 13, 15, 46, 57. And key support is at the former opening range high. And it looks like we just went for a tag of that, and it actually held. Does this make sense? The cleanest setup, by far, that we've been working with this week. We talked about this yesterday in the webinar, if you guys recall, the 60 break here in momentum. Pooja, were you in this one? I think, no, you were talking about dollar yen. Someone was in this one yesterday. But nice break above 60, cleared the opening range high for the week. Initial targets 46.57, 47.13. We failed ahead of the 47.13, okay? But obviously the Aussie data there giving us the stretch that we need. Okay, so just a broader look back here on where we are in the broader scheme of things, guys, for Euro Aus. Not really interested in playing the long side from this region unless we break above 48. I think inevitably do get that break, but right now, again, nice little tag of the resistance level there pulls you right back. So looking for short exposure while below 48.08 against 48.08. I do think you look to buy the pullbacks down here. I mean, honestly, guys, on this stretch right here is a perfect opportunity. You know, event risk-driven, you're not really going to get those clarity moves and opportunities to get in. But as long as you stay above 46, objectively, the opening range high for the week, you continue to favor the top side with a key break over 48 really needed for resumption. I don't think this is really going to be a very operative trigger here, but let's take this into a 5-minute chart and just see what it looks like real quick on the triggers. I want to see what that last one. It's got a crazy bad tick there. Current candle for Euro Aussie showing great volatility in your chart. Mine is different. Yeah, Chintan, I was just taking a look at that. Give me guys 1 sec. I just want to check to see if this was an isolated incident on this demo account. Yeah, it looks like the live one's showing it too. Guys, are you not reflecting this little tail here on your platforms? This is live right here. It does look like we got that spike there. In any event, it doesn't change a thing, Chintan, okay? The long side of the trade remains at risk while below this region. It looks like Adrius is seeing the same thing. All right. Well, I wish I had been in that because the limits would have definitely hit up both those targets. But long story short, that's sort of the game plan we'll be moving forward here on the Euro Aus. Remember, guys, in general, as far as the scalps are concerned, the efficacy, Tiffany, thanks for that. Tiffany says she has it as well. The efficacy of the opening range bias starts to wane as you head into the end of the week. So, very early in the week and very late in the week, I tend to be very, very timid and a little bit less trigger happy on these setups. But Stefan, thanks for that confirmation too. It looks like he's seeing that as well. So Chintan, it might be an isolated incident on your platform not showing, but it seems that's the broader consensus here. All right. So thanks, Eileen. So keep that in mind, guys. Again, all the scale charts as far as the 30-minute and the zoomed out ones are available for you. So you have all those levels. Listen, we're in this formation right here. Yeah, we're short, or the bias is against this region just because of the critical nature of it, the 618, the median line. In fact, where is the... Let me just see that daily chart one more time. Right. Okay. I'm sorry. Just wanted to get a review of where that was. That high was at 47. Any questions on Euro Aus, guys, before we move off this one? Really nice trade. 56 pips, a quarter of the daily ATR, so it's a nice, healthy scalp. But, the focus is on this region right here. If you do see a topside pop, guys, 48.75 into 48.90, which is the actual stretch high for the month, will be the objective target. All right, moving right along, we do have next on tap is the Aussie CAD setup. Here's what that looks like. So another trickster in disguise. Remember, as we were talking about Aussie CAD yesterday in the webinar, we were sitting above the opening range high for the week, and momentum had broken into 60 for the first time for the first time in the week, rather. A trade like this, guys, you're going to get stopped out on. Okay, when the market doesn't go and give us the follow through on the opening range break, our bias gets invalidated pretty quick. But remember, the invalidation level that we cited yesterday, both in the webinar and on Tuesday night, was 97.50. Okay, so really, if once 97.50 gave out to the downside, guys, there really shouldn't have been any claim to the longs at that point. That decline took you right below, okay, the opening range low for the week. Now, the problem that I have, and I noted this yesterday, the problem I have with favoring the short side per se right now is this daily chart. Okay, so the opening range for the week did break to the downside, but guess what? That decline came really close into this major key support target still. 96.57, 96.30, nice confluence of 100 off the high, 618 off the low, and exactly the opening, where we bottomed earlier in the week. So a little bit timid, but the opening range gives us an objective downside bias. So here was the break. One thing I showed you in the chart yesterday, if you checked out the scale, guys, is this median line formation. And look at how many pivots. There's more than what I even noted here. But look at how many pivots we've made off this region. Resistance, resistance, pivot break, resistance, resistance, consolidation, support, 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 right? So while the break of the opening range for the week was data-driven, the initial target at 96.57, 96.60 was very well met. Obviously, on the downside here, guys, I'm not really going to press it as we look at that daily chart coming into that major key support. So, I haven't been playing on the downside of this. You have some divergence into the lows of the trigger break here, but the trigger break offered no break in price. If this follows through with a move above 40 and price surpasses 96.57, 96.60, you'd look to play a little bit of recovery to the upside. A little bit tighter of a scalp, okay, not really the 50 pip ATR that you're looking at with Euro Aus, but certainly still healthy here at 34 pips. And then take a quick segue back to Euro Aus, guys. I want to show you something real quick about being dynamic with your levels. You're probably wondering, well, Mike, on the way up here, now that you've made a high, why don't you take a new retracement off this rally to play the downside targets? Why are we working with the same levels? Well, if your analysis is on point and you're pretty tight with your fibs, look what happens when I tack this on, guys. Same exact levels. 236 is represented already. The 38.2 is represented already. The 50 is represented already. And obviously 46, as we just noted, is the bullish invalidation level. So, quick note there. I thought that was pretty cool here checking out this morning. But Aussie weakness seems to be sort of the name of the game here on the weaker than expected employment report. Aussie's at support. You see it breaks up 96.30. Objectively, you're looking for that former trendline resistance, now support. And basically this little region here into 95.40, 95.60. Questions on Aussie CAD? Okay. Aussie dollar. I added this one to the intraday page yesterday, guys. So as far as the swing setup on the swing side of things that we were in earlier this week, beautiful play. All those essentially are taken out at this point. The last target on the swing side of things was 76.85. Here's what the Aussie dollar looks like right now. Daily chart's not really going to give you much. Just want to show you this for consideration of what we're looking at in the broader theme. Noting that you have some divergence here into the lows. Again, these divergence signals below 30 or above 70 are your weakest, so nothing necessarily to operate off of, but something to keep in mind. The scalp, guys, at the end of the day, was a beautiful, basic opening range play. Okay, and I tried to highlight that here sort of yesterday. So you had the 7750 region, which was the 50% retracement of the advance there. You had some divergence into the highs. This is where swing entry was eyed. That put us on the short side within the opening range for the week. The break here is really what we needed to validate our bearish bias. Okay? And within the confines of this pitchfork, which is what we've been working with, there was another one I added here yesterday. And this region is what I highlighted as our bearish invalidation level. Okay? So near term, it's been a hell of a stretch. You got a nice opening range for the week. You achieved, you achieved a Thursday low. And at this point, with momentum coming back above that 30 level in overnight trade here, I just wanted to note, listen, if this thing pops through this region with the median line there, with the current operative median line of the embedded formation as well, I want to jump out of the short exposure. Well, you actually got a trigger break here, okay, dating back to the highs of the week, that gave out and price pushed right through it. So I'm out of any short exposure at this point. I think near term, heading into the U.S. session, you look for possible resistance right around 77 handle, 77.20. A conviction short trigger here, guys, would put us back in the formation. I suspect that you may see the topside give out of this embedded formation, in which case you'd be looking for this upper median line parallel on account of the dollar index, right? We just talked about that. And, looks like we're going to see another defense of that 11,880 range. So, beautiful play on the Aussie. I think we've exhausted the downside in the immediate stretch here. Looking for short trigger as well below 77.20. Topside break above 77.20. I think you see a little bit more of a concerted rally back into the opening range low for the week. Questions on Oz? Did anyone get involved in this one on last night's release? The employment report, obviously, guys, real dismal, much weaker than expected. So here is what the Aussie data looked like last night. Expecting a build of or a contraction of 5,000 jobs. You got a contraction of 12,000. Unemployment rate upticked by not just the 6.2%. And remember, we talked about this just yesterday. The fact that we're trading the expectation deviation, guys, not the print. We were expecting unemployment to uptick to 6.2%. That was all but priced in. The fact that the expectation deviation was worse, that's why the Aussie reacted the way it did. I was thinking about you guys when I saw this print yesterday because we just talked about this. So obviously, dismal report across the board. Full-time employment contracting by 28,000. You get a build again in the unemployment or employment on the part-time. Remember, we had a lopsided recovery here earlier last year with most of the labor or jobs in Australia coming by way of part-time, and that was a concern. So obviously here you're seeing full-time continue to contract, part-time building. Not really a very strong labor report across the board. But Aussie was already on the downside, okay? And that's a trade that, in fact, once you've made an opening range break, once you're bearish, the trade is heading into support, and you get a dismal report that adds fuel to that downside, typically that's going to be like, the last near-term leg that you'd want to be a part of. And you let this thing reset a little bit, let the dust settle. Eileen says, I missed that one. Stefan says, no, I had the swing trade and loved it. Right on, Stefan. It was a beautiful setup, man. Got to give props to Jamie. Was short prior to the opening range at 77.50, says DB, and closed out this morning at 76.55. My man, what a position. 77.55 is exactly where I would have had the or actually, I probably would have had it even higher at 76.60, right on the mark there, but nice exit on that one. DB, well done. Brian says, yeah, I was short with Jamie and took the limit into 76.60 as well. Cool. Nice job, guys. Love to hear the success stories. Well done. So let this thing rebound. I do think if you see a pop above 77, we get that recovery near term. I know that Jamie was looking for a low here anyway, so we're all on the same page as far as the broader positioning here for the Aussie. Any questions on current positioning for the Oz? Feel free to throw those questions out now. All right. So Last but not least, and just a quick remark on the last thing noted on yesterday's intraday setup, and that was the gold trade. Listen, we broke support. Okay, we broke that key support barrier that we were talking about. 1230 was a nice confluence of the lower median line parallel, a 100% extension off the high. It was the exact December high day close, 1230, and a key pivot in price, right? Any way you look at it. So if you guys recall the day before, we were constructive above this circular highlighted region, which the top region was 1230. That break yesterday really causing some concern for me. I think you don't really want to be holding on to that long bias anymore on gold. As a disclaimer, I don't scalp this pair, but I do follow it very closely. So, if you are intraday trading these levels, they've been very clean. It's just from this point, I think you risk some serious losses for gold. Not only was it all those things we just noted at 1230, guys, but I'm also looking at this median line, which is a shift formation off of the 2013 March high, if I'm not September highs. And that puts us back below that here as well. Momentum back sub 50. We noted yesterday resistance at 1230, but to get back constructive, you need to get back above yesterday's high, which is 1240, 1238. So at this point, guys, you have to maintain the bearish view below the 200-day moving average. I wouldn't do anything from here per se, but you look to sell rallies sub 1240, breaks of support, subsequent downside targets. 1206 is a big region. If you recall, that was a low week close, I believe, for 2013. And then the major next region of support that I'll be focused on are my favorites, 618 confluences in the fib relations here. Okay, 1618 off the high and a 618 retracement of the advance. Dale, Mike, it's a great question, Dale. I'm glad you asked it because I don't want to stress it that way. Dale is asking, Mike, can you tell me why opening ranges with all the pairs are so important? Thanks. Dale, I wouldn't say they are so important. I wouldn't say they are so important at all. Listen, I talk about opening ranges a lot because it is a tool for intraday, short-term, near-term trading. Okay? They don't always work, Dale. There's nothing in trading that's 100%. There's no strategy that's 100%. But the psychology behind it is that, listen, when the market comes in, the market will tend to set a high and low early in the time frame. So if you're looking about the week, typically early in the week, markets will set a high and low. A break of that level gets you a directional bias heading into the end of the week. This is based on a lot of different things. In fact, if you look at some of the seasonality presentations that we've done on Daily FX over the last couple of years, you'll find that historically, if you look at these currencies on a weekly basis, typically, if markets will close and open at the extremes, typically, meaning, if the market is in an uptrend, typically will close towards the highs of the week, and on the opposite side, right? I'm butchering this explanation, Dale, but the point being is that this strategy is actually highlighted in a book called The Logical Trader by Mark Fisher. Definitely, if you have some time, I definitely would recommend you give it a read. But it really highlights his use of the opening range strategy specifically in the commodity pits on a daily basis. Just so happens that type of strategy, if you extrapolate it across time frames, actually works pretty darn well. We've done a lot of studies that you can see these opening ranges both on a weekly and daily basis. Now, I go as deep as going into even hourly opening ranges, Dale. In that markets, if you look at a 5-minute chart, will tend to set that high or low within the first 5 to 10, 15 minutes of trading, and then close that hourly candle or close that hourly session, on the extreme. Meaning, if the break of resistance on the highs, if the break of support on the lows. Now, Dale, why I say it's not important is because there's no one part of my strategy that I will say, this is all I'm watching. Dale, it is just another tool to add to your box. Does that make sense? So again, objectively, I will never take a trade purely based on RSI. Objectively, I will never take a trade purely based on the opening range. Objectively, I will never take a trade purely based on the session opening range or the hourly opening range. But when those coincide together, that's where it becomes a strategy, Dale. So if we get an opening range break for the session and a trigger break in momentum taking us back above resistance, that's a play. Dale, does that make sense? They're all part of this. There's not one thing. I don't want to necessarily stray. Opening ranges are all that important because sometimes they won't work. And in fact, guys, when we're talking about opening range reversals, those can be very painful for intraday trading because you get an opening range validation, then it invalidates and breaks the lows, right? So it's just an added tool. I don't want to ever stress any one singular part of our strategy, guys. They're just puzzle pieces, and when they fit together, they give us that complete strategy. So I hope that offers some clarity on that, Dale. Great question. I got a full toolbox. Just have to learn all my tools together, says Dale. Right on, man. Right on. You're in the right place. Okay, I'm running a little behind in the questions here, guys, so I will get to it. I will get to all your questions. So as far as the intraday page are concerned, those are all the setups that we've been highlighting this week. Again, as a disclaimer, I'll actually be out till Tuesday of next week, guys, so scalp webinars will pick up on Wednesday. I'll be heading up to Vermont for a nice birthday ski trip there, so we will be back on board with the live webinars on Wednesday morning. But let's jump into some of your questions here. I see a lot of things hitting the wire. So first things first, Tiff, good to see you. Tiffany says, can you look at the euro dollar? Sure can. You guys talk about opening ranges. There's nothing more... There's been no opening range this week that has been quite like the euro dollar. So real tight, holding just below resistance. This is a 618 extension off that high, and it's off the 38.2 off of the ascent. And we've been really focused on either a break above 113.65 to give us the long side bias or a move back below 112.67. Obviously, we've been favoring a topside break all week, guys. And that's just been based upon what we're seeing or what we noted on the daily charts, right? And that 1095 level that we bounced off of earlier in the month, critical, or back in January, critical support. So now that we've moseyed our way back within the confines of this pitchfork formation, back above that support, you look for that correction to gather some steam. So for the euro, I've been much more inclined to play Euro CAD, Euro Oz. I think Euro Yen starts to come into a very interesting zone here shortly. For the Euro Dollar, Tiffany, I've been waiting for a break of this range. The momentum signature, I mean, this is nothing to me here, guys. Straddling 50, 40 hold, 60 hold, 40 hold, 60 hold, that's nothing. Now, if we push through on an open for the U.S. trade session here through this region, I'll be looking for a target at the upper median line parallel here. And that basically takes you just shy of, 114.30 or so. But there's been no place for me here for the euro dollar at least. And, I tend to stay away from these pairs, guys, that, you get jackknife. You see all these wicks and all these huge bars? Every single one of these was some stupid announcement or some stupid headline. Oh, we might have a deal. Oh, we don't have a deal. Oh, this, it's just noise to me, guys. I don't like to deal with that. It takes my focus off the trade. And, I don't trade headlines. I trade price action. So I don't, I try to stay as isolated away I can from all that noise, guys. Obviously, we're watching the headlines here. We have, Reuters terminals, Bloomberg terminals. We're seeing the major headlines come up, but I don't give any credence to it, and I don't want it to affect my trading. If that announcement prompts something in price action, then it's just a normal trade, run-of-the-mill, just another day. But it's just noise. So, for everyone who saw this rumor here and saw the breakout, oh, great, Euro's going to see a huge recovery. Well, we're still within the opening range. We did nothing. So I'll focus for a break above 1365. If we do get it, like I said, I think 1430 is a nice, decent target with the price pivot that we've seen here over the last couple of weeks. But also you have that upper median line parallel. Now, I don't have too much conviction. I'm going to say this right now, guys, on this formation, just because we don't have too many tags yet. So to validate it, I think it shifted some reason. To validate that break, we'll need to see a little bit more of a rebound off of these slope lines. But that's the game plan right here. If we do clear 1365, 1355 on the upside, objectively, that puts us bullish. I don't care what the headlines say. I don't care what's coming, as far as what expectations are, what could happen. I'm just looking at price. If we get a headline that charges the break, cool. We'll look to buy pullbacks well above 1357. Also note that the momentum signature has been pretty constructive since the start of the week as far as the lows are concerned, right? Every low that you made, higher low in momentum. Okay? And more importantly, what I'm focused on, this is the first 60 break that we've seen all week. So, it looks like we could get a break higher. Focus would be on 1430 in such a scenario. Tiffany says, thanks. Appreciate that, Tiffany. Stefan says, happy birthday. We'll miss you. Thanks, man. Appreciate that. Question here from Ray. Great to see you in the room, Ray. Says, any opinion on dollar CAD? I appreciate your help. Sure thing, man. Let's take a look. Ray also saying, Mark Fisher. I remember when he was a skinny kid with long hair on the floor of the Merc, right? Yeah, it's a great book, and really actually helped me develop this a couple of years ago. Sitting on the trade desk for hours and hours and hours, you start to really get a better taste for intraday price action, and the way that he highlighted in that book, I think, is a really good benefit to you guys if you're looking for a little bit more of a guidance on intraday trading. But in any event, dollar CAD, yeah, let's take a look. Dale saying, you got plenty of snow up there. Enjoy. Happy birthday. Thanks, Dale. Yeah, actually, I was reading an article yesterday that Killington has record snow conditions that they haven't seen over 10 years. So this will be my 4th trip this year. Trust me, I'm looking forward to it. Listen, as far as dollar CAD's concerned, guys, I still don't like it. I try to review this guys with you every day, but I just don't. It's not my cup of tea. Remember that pitchfork that we added on yesterday? It actually does look like it's actually still offering some price action or some guidance. Let's say it's a price action here. My problem is this. I think you get a near-term correction, dollar CAD. I think that you look at the dollar index for guidance on when that turnover happens. That being said, if you're hell-bent on trading the CAD, I still think you're better on the crosses. I really do. 70 pip ATR is rather tight considering the volatility that we're seeing across the board at this point. It says, okay, I understand. That's how sterling has been for me. And Stefan says, cheers, homie, gotta run. Thanks for the knowledge. Anytime, Stefan. Great to see you. So, Ray, let me take a step back. Forget my opinion. Objectively speaking, you made an opening range break for the week, and you just defended that as the low. Okay, so objectively speaking, despite what Mike Boutros thinks or whatever, you want to stay constructive above 250, 2540 here. Excuse me. Objectively, that's the opening range high. It's also the median line parallel at this point. If you don't believe in any of that stuff, let's just say you want to look at a basic trend line support. Well, that suffices too. Okay, so any way you look at it. Yeah, near term, you want to focus your attention higher while above this region. A break below this, and you're looking to play the retracement. Raymond says, great, thanks, and it's good for me to see your chart. Anytime, man, anytime. But that's how I would look to play the dollar CAD. Is that ATR correct? 20 pips? Is that the daily? Wow, it is. Yeah, not bad. Let's put some triggers on this for you. Okay, so obviously you're going to want to zoom this into a 5-minute chart if you're actually going to be looking to take positions on it, guys, but here's the basic premise of what I'd be looking at. Near term, like I said, that's your support structure at 2450. If you see a break below this near-term trigger, it does have 3 tags already, and a move surpassing the lows, that would also be an opening range break for the U.S. session. I went to put into view targets at 25 and 24.50. Any long exposure you take should be against this low. I don't have a trigger to put us on the longs, but on a stretch above 60, you'd look for momentum to find resistance here, and that would be basically a coincidental break above 125.75. So not my cup of tea, Raymond, but I hope it offers some clarity and some reference for you. Also, guys, as a quick reminder for those of you who are newer to the room, you can always click on the camera option right here in the GoToWebinar pane window. You see a little camera button there. You can click that at any point and take a free shot of the chart that you're looking at. So if you need to refer to it or reference it at your own leisure, you'll have that available for you. So just a quick note there. Raymond, that's dollar CAD for you, brother. Mark Lavenger says, on U.S. dollar, what is the implication of a daily key reversal at resistance if there is no weekly reversal? What is the implications for a daily key reversal at resistance if there is no weekly reversal? I'm not really sure I understand your question. A key daily reversal is just a bearish development. Same thing with a key weekly reversal. If you're looking at this at a weekly standpoint, already there's cause for concern on the long side, right? Even on the weekly chart, Mark. These not real dojis, but very close to being dojis, right, show a lot of indecision. The fact that we've continued to hold the same high with a positive weekly development and negative weekly development last week, and another positive one adds to the indecision. And, I mean, listen, I really don't have any layers or levels that are too close to beyond this except 1250. So if we do see a topside break, there is room, okay, for the dollar to run. Let's never forget the objectives, guys. At the end of the day, the momentum signature on the daily chart on the weekly chart is an overbought condition. We're not trying to fight the shorts just yet, but we are noting that the long side is still vulnerable, sub 11,880. And if you've been walking with that game plan, guys, since the start of the year, you've been doing all right. You've been doing all right. So I'm not really sure. Does that answer your question, Mark? I don't add extra credence to one or the other, or one without the other does not make sense. It's not like that. They're both just indications to suggest exhaustion, and especially when they come at key resistance, can sometimes be a very nice tell before the market turns over. And that being said, you don't necessarily have a downside trigger yet. And in fact, this move right here adds to the divergence that we're seeing. Okay? Remember, we're not looking at these wicks. We're looking at the close price. If you're bringing it into a line chart, higher high, lower high, lower high. So the exhaustion story is still developing. It's just that some of these things sometimes take time. It takes a little bit of a lag before you actually start to see the market turn over, and that's where patience comes in. But just some reference here, guys. Obviously, if you're trading stateside, we can't have access to the U.S. dollar index here, Dow Jones FXCM dollar index. But for those of you who are trading overseas, great index, and really clean as far as the levels have been concerned. Mark, does that help? Does that make sense? He says, thanks. Right on, brother. Right on. Lee, great to see you in the room. Welcome aboard. Let me know if you have any questions or trade setups you want to review. Let's take a quick segue, guys, and talk about crude. I'm sure this is going to make headlines again today. You're seeing some volatility in that trade, but interestingly enough, the opening range for the month remains intact, and that's what remains in focus. The daily chart for your consideration real quick. Don't worry about all these trend lines. I'll explain in a moment, but here's your February open. We stretched into a key resistance that we noted, 53, 53.90, support 47, 47.70, and that's where we've been for the last 2 weeks. Okay. Now, in intraday price action, the 30-minute chart I was just showing you, interestingly enough, this break here that we made earlier in the week did yield a nice decline, which basically tested the weekly or the monthly opening range low. Just missed it by a couple of dollars here, and now testing the upper median line parallel. Okay. If we see momentum surpass 60, and if we see an opening range break for the European opening range high, which is 50-50, topside objective, right back at the monthly opening range high. And in fact, at this point, within that same region, you'll have that same support or lower median line parallel from the lows. So really clean as far as the formations. I think you do get the break, especially if the dollar sees some further pullback here. And you look to play this back into the 53 handle for crude. We really need to see that 60 break in momentum, guys, especially because on the pullback here we've gone sub 30. So to stay constructive, hopefully we get that development here soon. So for those of you trading crude, these are the levels that we've been focused on. Those levels will continue to play. Like I said, major key break here. You're still going to be waiting for a break of 54 to get the validation of a broader correction to the upside here for crude. Lee says, I am new to SB Trade Desk. I have trouble following the system, especially the opening range in validation levels and when to enter / exit. So Lee, you're in the right place, brother. Feel free to let me know any questions that you do have. Guys, we are in the beta version still. Unfortunately, we're still wrapping up all the rest of the details, but I will have a lot more educational material that will be on the resource section, specifically geared towards more of the intraday trades. With the official trades for SB Trade Desk being the swings, we really want to make sure that all the educational material for that specific strategy is up there. So that is. And there will be a lot more resources available for you as far as the intraday strategy. But Lee, let me know if you have any specific questions. I can't go over the entire thing right now, but it's kind of a little later in the session already. But let me know if you have any specific questions. The premise of the idea, guys, is that we're mapping out critical technical levels to the market, both on the upside and the downside. The bias is not really what's in focus when we're mapping out the levels. Once the levels are mapped out, Lee, then we're gauging momentum and opening range breaks to gauge where we want to be getting in and out of the market. Okay, so we map out our levels, and then we're just looking at triggers to get us in and out of these positions. So for example, these levels were mapped out earlier in the week, right, for the Aussie. The Aussie opening range for Sunday, you look for a Monday, Tuesday high, and you look for a break of that to give you a bias. That break happened here. Gave us a downside bias, looking to play these downside targets into the Thursday, Friday low that you would typically see. Now there's a lot of different ways that we can shift our bias. You had some divergence in momentum here with a trigger break. A lot of times I'll line up triggers here, Lee, in momentum. It's just basic trendline support. And there's nothing, added emphasis on oscillators, guys. I'm here to tell you, as someone who's been using these for years and years and years, all oscillators are backwards looking. There's nothing forwards looking about them. But all we're trying to do is get a graphical representation of a shift in momentum. Okay, that's it. So when you see a trigger break coincide with a break of support, with a break of resistance, these are operative triggers for us to jump into the position. The invalidation level, Lee, these are levels of which, if broken, omits the idea that we're looking at. Okay, so to start off the week, as a primary example, the invalidation level for the Aussie was 78.40. So we came into this week looking for a bearish setup, and if we had broken above 78.40, that would have invalidated the short side, meaning immediately on the scalp setup, you're looking higher if that breaks. And the same respectfully on the other side. If there is a bullish invalidation level, would be this, the opening range low for the week. Once we break below this, you're not bullish anymore. The trade is at risk for a real slide. So Lee, quick breakdown there. Let me know if there's any specific questions. Again, it's something that's going to come with time, so feel free to bring it up as we go through the sessions. Lee, we do this every morning, Tuesday, Wednesday, and Thursday here on SB, so we'll try to get you up to speed as fast as possible, brother. He says, thanks for the question, Lee. Great to hear the summary again, Michael. Lee says, educational material. It's on the way, my friend. It's on the way. Pooja says, hey, Mike, could we also take a look at the dollar-yen? It's held pitchfork parallel support so far. Yeah, I was checking out the dollar-yen earlier today. Here's what the daily looks like. All right. What I want to point out at this, I was thinking about this earlier. Oh, a couple of things. First of all, I'll show you the scalp in a moment, which is much clearer. I know this is a pretty ugly chart, but it's the abomination, so it's an ugly trade. In any event, I just want to show you one thing, guys. The momentum hold at 60 here. You know, as I noted in on SB a couple of days ago, cause for concern or a great clearance if it breaks. Okay, and that's how I like to play these setups. As it stands, the momentum signature for dollar yen has been more constructive than any other momentum signatures that we look at. Specifically, the sheer duration of time that you hold in overbought condition, really keeps the the broader upside in focus. So 60 hold here could be an indication that we're not out of the woods yet, and we're not on full-on resumption for the broader uptrend just yet. Here's what the dollar yen scalp looks like. So I'm not sure which median line you're looking at, Pooja, specifically. Okay, I'm looking at this pitchfork formation just off the lows that you made last week. And in fact, if you take a parallel off that and extend it to the lows that you made right on Friday ahead of NFPs, right? Nice confluence range there, which held. Dollar yen, same pitchfork and parallel. Pooja, right on. Great to hear. The one thing I do want to say, guys, is objectively, this, to me, humbly, I thought was the opening range high for the week. This break is what got us more constructive. If you guys remember, we went over this trade. We've been following this trade this week. And the pullback here, yeah, we got a couple of stretches into key support, but the pullback here, broadly speaking, finding support at the former opening range high, right? So let's update these triggers. Nice 5 tag there. That's going to be pretty important. Okay. If we look at the momentum signature, this is the deepest stretch we've gotten so far this week, and certainly the first 40 break that we've seen this week. DB says, Mike, can you show me how to get the parallel? DB, I'm embarrassed to show you because it's actually kind of ghetto on my end. When you're trying to make a parallel off of the pitchfork, guys, in fact, there's no, Market Scope does not let you copy. It doesn't let you actually copy a pitchfork. So literally, DB, I'm literally just pulling one of these. Mirror the slope, and you're on your merry way. Hope that helps, DB. He says, got it, thanks. I wish there was an easier way to do it, but it's limitations of Market Scope for now. Once you have a slope, and if you're using pure trend lines, then it's just, hold control, and you can copy any line as many times as you want, guys. Just hold control and click on it. So remember, at the end of the day, guys, there's nothing special about the pitchfork formation. It's just an easier way of drawing it. You can make all of these moves just by drawing basic price action, right? And then extending off of the major highs and lows that you're working with. So I can redraw this whole formation, essentially using basic trend lines. But hope that helps. Eileen says, me too, good trick, right? All right. So guys, listen, at the end of the day, dollar yen, you're still looking for a broader confirmation of this consolidation feature break. Okay? And if this is the real deal, then this is exactly what you want to see, and you want to stay constructive above 118, 90, 119. Guys, a classic break of resistance, check it as support and move off. There's nothing more basic than that. So it looks to me like you could have completed a 5-wave stretch here. I don't know. But even if that scenario is true, you'd be looking to buy that correction, while above 118.90. Okay, so this will be reserved, guys, as our near-term bullish invalidation level. So Lee, if we break sub 118.90, man, you're not looking on the long side for the scalp setups anymore for dollar yen. Such a scenario really basically shifts the focus right back into the 118 handle. Does that make sense? Okay. Cheers, Lee. I appreciate that. So, guys, let me know any other pairs or trade setups that you're looking at that you'd like to follow. I'd be more than happy to take a look at anything you guys are looking at. Just wanted to make a quick note. I looked at this earlier this morning. Kiwi still holding the weekly opening range. No plays there. And I think Kiwi's, going to be up to some mischief. I think you're going to see a whole lot of this again before we start to make the next stretch move. So really off the radar for me as far as that trade is concerned. We covered dollar CAD. Watch for a break below this zone to invalidate that upside bias near term. Euro dollar. Watch for a push through the opening range high to get you that run into 142.30. While within this region, guys, it's a no play. Okay, hands off. What other pairs have we been looking at? DB wants to look at Euro Yen. Sure thing. Aha. Okay. Right on. So, excuse me. The monthly opening range for February, right? It looked like this would have been the break. Still going to watch this pullback. Broadly, near term, I'm still favoring the upside above 134. But this is major key resistance, and the momentum holding a very clear trigger there off the highs. Let me see what this looks like near term. Euro Yen, Euro Yen. Okay. I don't want to necessarily stress this soft target, guys. I'm going to leave it on there for your consideration there at 33.80. I don't want to necessarily stress that. This is still the major focus support region for me for Euro Yen. If we are going to materialize into a little bit more of a draw higher here, I'd stay constructive above this region. Loosely, okay, loosely it's the opening range high for the week. But it's just a nice confluence, guys. You have a 618 extension off the lows there. You have the 236 off of the decline from the highs. And what is this? Also a 2618 from the extension off the highs there. So pretty major pivot in price. You can see it catching the lows here for January before the inevitable break at the end there as well. Yeah. Yeah, I mean, I like it above 34.80, guys. 34.75, 34.67. This region right here is all I can say. Haven't really taken any positions on this, and the momentum signature's kind of ugly here, to be honest with you. Looks like that would have been your short trigger, which would have been an operative play. And here's your resistance trigger right now. I'd work with a long bias above 134.75. So I'd be looking to buy pullbacks. I'd be looking to buy resistance, trigger breaks, and momentum well above this region. So DB, here are the scalp targets. If you want to take a picture of this setup, these are sort of the targets I'd be looking at near term. That's the formation that we're in. Oh, interestingly, guys, looks like this swing trades 134.80s into 135.20 could provide support. Okay, so looks like Jamie's looking at the same region too, with a constructive bias well above that region. Yeah, and the resistance triggers the resistance levels, rather, objectives are very nice. Initial targets If you do get a long trigger in a final break here to the upside, looking for 36.28, 36.70, essentially, 36.68. More importantly, look at that 38 too. Nice conviction pivot there in price in and of itself. So I'd stay constructive above 37, 34.75, 34.60 here. Hope that helps, DB, on Euro Yen. Again, haven't traded that in months. I'm not really a fan of what the daily chart's doing. So typically when the daily's a little bit off, I'm a little bit more timid and I won't be as active in the trade. I did want to take a moment, guys, and just review the scalp that we put together here in the webinar yesterday. For those of you who were with us, there was a question that came up on sterling yen. And we put this scalp together yesterday. Just wanted to highlight what's been going on since. So sterling yen, for those of you who haven't been following us on Daily FX, this is actually my trade of the year for the last 3 years running. Long story short, the rally that we saw that took us through 180.90 really changed things. Hold on one sec, guys. I'm sorry about that, guys. But basically, the break above 180.90 is what changed things here. Took us back into the confines of this ascending formation, and at that same move, also broke a long-standing 3-month formation to the downside. So I'm broadly looking or favoring the top side. We talked about this yesterday being a major resistance. I just wanted to note what the reaction has been off that level. The reaction off of the R1 monthly pivot. You have a longer dated 50% retracement from, can't remember what the reference date was off of this one, basically 83.96. And I want to get the reference point. I think this is off the 2010 high? No. 2007 high, I'm sorry. Okay, so you have that 50% retracement there, and just a basic retracement off of this last stretch high gives you a 618 at 84.26. So do you see what happened on the stretch here, guys, into that region? Real strong whipsaw reaction taking you right back for a test of the same region that put us constructive in the first place. So long story short, the rejection of that region keeps the focus higher. You're essentially waiting on a break above 85 here, or 84.25 rather, to get the upside going. Really in the healthy range scalp, 221 pips to the daily ATR. The only other thing, caveat here, momentum, still sub 60. Still sub 60. So you can see, you could envision a scenario where, you get another whipsaw to the downside, possibly check that former pitchfork support again, and then making a vault off that region. But very interesting price action. Again, sterling yen on the intraday, also pretty clean here. Pretty clear here at the 30-minute. Okay, nice pitchfork formation on the short term. Really, really well, well received by market price action. And again, just highlighting. Right? Not to mention, by the way, just a quick note, that's some crazy divergence, okay? And remember, the closer the divergent signals are to the 50 median, actually the more emphasis you put, the more the stronger the signal becomes, in my humble opinion. So just something to keep note of there. Again, below that key resistance region. You still might get another spill on this one, but I think inevitably you look to buy that. So quick adjustment. The only adjustment we made to this setup that we put together yesterday in the webinar, guys, is just take that retracement to this fresh high that we made in overnight trade to adjust those downside targets. questions on sterling yen? Oof, okay. Aussie CAD broke the lows. And that puts into focus that 95.87 region near term. Darn, we just missed the trigger on this one, guys. Too slow. So 95.87 is the actual stretch low that we made for the month. Let's take this back into the daily chart real quick. Aussie CAD. Right, and this is not on the scalp chart. I also just want to show you this as well. The exact trendline resistance where we gapped above on the open here in early January. Yeah, that's going to come into focus here at this point. A break lower, 95.40 into 95.60 becomes the next key area of support for Aussie CAD shorts. Momentum signature deeper into 50 here. You look lower, guys. Look to sell bounces here in sterling Aus. Thanks for saving me on dollar CAD, says Raymond. Will you explain that trigger? Which trigger are you talking about, Tiffany? Okay. Yeah, there's a dollar CAD. There's dollar CAD. So guys, this is actually a very nice play here because the opening range, we just moved in 5 minutes into the open of U.S. trade here. These breaks are things that you do want to actually pay attention to. So the push for dollar CAD, there's 125 just getting hit. Now 124.45 is the next downside target. That's 786. You stay bearish below this region near term. Oh, Tiffany says the one we just missed. What was that on? Aussie CAD, I think, right? Yeah. Okay. So the objectively, when I said trigger in that one, just to clear things up, Tiffany, objectively I was talking about initially the opening range for U.S. trade. That was the trigger break in price, right? Here's the 7 o'clock hour, 7:30. You set a range. Range high for the opening range for U.S. was just below resistance. Range low was just a tad below that median line. That break puts you bearish against the highs heading into the close of U.S. trade. That being said, on the actual trigger for momentum, we'd have to look at it at 5 minute, but I guarantee you there would have been a beautiful trigger there, and it looks like it was. So on a trigger like this, there's a couple things I'd be looking at, Tiffany. This would be the first trigger. 1, 2, 3, 4 tags validates it. The break, okay, with a move below the opening range low would have prompted a short about 96.28 against 96.55. Remember, you're looking for 35 pips. That puts us right inside our risk-to-reward tolerance. Looking for a stretch into 95.88. Okay. In and of itself, well, there it is. That's the trigger I would be talking about. Does that make sense, Tiffany? She says, thanks. All right. Yeah, nice play. Nice play here in Aussie CAD. In fact, we can take this as a chance to take a lesson. Let's see what the dollar CAD trigger looked like. I'm sure that gave us one on a 5 minute as well with that kind of move. Not the same. Not the same. Okay, not the cleanest trigger for sure. He's got a lot of jackknife action there. But that's what I've been using. So Tiffany, on this move here, you only have 2 tags. So again, 2 tags of a trend line or a trigger makes it speculative. 3 tag makes it confirmed. That being said, the 40 break in momentum was coincided with not only the trigger, but a break of the opening range low. So you see, guys, why we're using all these things together in congruence. I'm not just using the opening range. I'm not just using RSI. I'm not just using a break of support. But when all of those come together, okay, these are the type of reactions that you do get. Guys, does that make sense? Okay. So we are, as in classic style, way over on time, guys. I'm going to go ahead and end the session here, and that's going to wrap up our live sessions for the week. We just want to take a quick moment, guys, and again, thank you for those of you who've been providing us some feedback. I do want to really tell you guys how invaluable it is. And the more feedback you guys provide us, the more me and Jamie can really cater the service to something that is going to be much more beneficial for your trade. So I do really appreciate your feedback. And again, we will see you on Wednesday morning at 8:30 Eastern for the next Scalp webinar. Also on Wednesday, obviously, the regularly scheduled weekly strategy webinar with Jamie will take place at 1 o'clock. Triangulation of indicators, says Alex. Crystal clear. Wow, thanks so much. Enjoy your trip, says Adrius. Have a good time, a grand time with all the snow, says Eileen. Mark Lavender, appreciate that as well. Tiffany, Raymond, Brian, don't get lost in the woods. Hey, man, I love the glades. Don't worry, I'll make them out. Guys, have a great weekend. Best of luck trading, and we will see you next week. Cheers.